Good morning, everybody. Thank you for joining us this morning. Just give us a few minutes. We're just going to let everybody into the room. If you can see me, Paul, and Harry on screen, and you can hear me, if you want to just pop something in the chat box for us to let us know that you can see and hear us, tell us where you are, what's the weather like with you, anything like that, just to get the conversation going. We'll give everybody 30 seconds or so to settle in nicely, and we shall get the session underway. But thank you for taking the time out of your busy diaries to join us. I know there's lots going on for people at the moment. So I'm getting a little concerned because nobody's put anything in the chat yet. So I'm hoping that it's just because you're still settling down with your coffees and haven't got spare fingers to type or anything like that. And you can actually hear me. I hope that's the case. Or we've got a problem that we've had before and chat box isn't working. There we go. Thank you very much. I'm relieved now that I'm coming through and everything's okay. I was going to say if the chat box wasn't working, use Q&A, but it's working perfectly. So whilst we wait the last few in, if you have any questions at all during the session, pop them in the Q&A box for us. Harry and Paul are really keen to take any questions. I'll always have an answer to something, whether it's meaningful or not, I'll let you decide. But I'll always have something to say. Any general comments and things, pop those in the chat box. So I think that will do us. We will get underway. So welcome to our March App of the Month webinar. I'm delighted to be joined today by the guys from Joiin, who will introduce themselves in just a moment. For those that don't know who I am, my name is Will Farnell. I'm founder at Farnell Clark, an accountancy firm in Norfolk, and I'm also co-founder and director of App Advisory Plus. And I'm delighted that Paul and Harry have joined us this morning for this session. It's a very different session. We're talking about a topic that we haven't talked about in 2 years or so. We've been running these App of the Month webinars, so I'm really excited. I hope it's going to be useful for you. But let's get Paul and Harry introducing themselves. So Paul, do you want to just give us a quick introduction, please?
Yeah, thanks, Will. Welcome, everybody. Thanks for taking the time out to come and listen to us today. My name is Paul Shipway. I'm the commercial director at Joiin. My background generally is very much kind of owner, manager of sort of SMBs over the last 30 years, typically from startup through to sort of 10 to 12 million in turnover, with sort of small and large teams. A lot of that has been with liaising with advisors, sort of external advisors, as well as managing in-house finance teams. So I understand the need for kind of delivering accurate financial data as quickly as possible and month by month to manage the business. I came on board with Joiin. I've worked with the team at Joiin previously in different projects. Came on board 3 years ago, just after launch, as a non-exec director to advise the board on growth, and then came full-time just 2 years ago, basically to drive growth. Kind of first man on the ground, really, from a senior management perspective. And here we are today, 2 years later.
Excellent. Thank you, Paul. And Harry, you and I have had the pleasure of sharing the screen for one of these webinars before, but in case anybody wasn't here last time, do you want to do a quick intro?
Yeah, thanks, Will. And thanks for everybody for joining. And I was going to say, actually, Will, it's our second time doing this, isn't it? So
yes.
Yeah, and enjoyed the last one very much. So yeah, so I'm customer success manager at Joiin, so kind of tasked with helping customers on board and then kind of helping them throughout the life of their plan. Obviously, kind of my fingers are in some different pies as well within Joiin. And I was, like Paul was saying, he was kind of director number one. I was employee number one at Joiin. So I'm kind of an old face at Joiin. I've been around about 4 years now. Very much enjoying it as well. And it's been good to see Joiin grow. And look forward to the rest of this webinar.
Brilliant. Thanks, Harry. There's two elements to the session today. So firstly, Paul and I are going to have a chat around some of the challenges for firms. I mean, if we look at the app ecosystem at the moment, the choice is the word that's thrown around regularly is overwhelming. There's so many options. If you take one single category, there might be 12, 15 products for you to choose from. So firstly, why is it important that you make the right software decisions? I'll share a couple of the challenges we've had as a firm around that. But then we're going to go on to talk about some of the things that you should consider when you choose what software to use, both for you as a business and for your firms as well. Paul's going to talk about a thing called product-led growth. It may be a term that you're familiar with. It may not. If you're not, then we're going to share that with you. And certainly while Paul talks through that, I'm going to think about some of the ways that accounting and bookkeeping firms might be able to learn from some of the principles that Joiin have used in their growth by taking a product-led growth approach to what they do and how they take their product to market. We're then going to kind of bridge into showing you Joiin. If you haven't seen it, then it's a great opportunity for you to see the product in action. But in that bridge, we're going to talk about kind of how product-led growth has driven the product development for Joiin and why they have a product that they do at the market that's a really good value for money product, but equally is very focused on delivering appropriate outcomes. So then Harry's going to come back and spend about 15 minutes just showing you Joiin in action. We'd love questions, so pop any questions in the Q&A box as we go through. And the plan is that we're going to be all wrapped up for you at 11:15, and I will do my best to make sure we finish as close to that as we possibly can. So that being said, Paul, do you want to just, for people that don't know who Joiin are, do you want to give us a view of kind of where Joiin came from, the problem you're solving, and what you do as a business before we get into the conversation?
Yeah. Sure, thanks, Will. We are basically a simple yet powerful solution to your group reporting needs. So whether that's multi-entity and or multi-currency, the business was started, or the sort of minimum viable product was launched approaching about 3.5 years ago now. The original co-founders were approached by a business who were looking for a way to consolidate their multi-entity business, and there didn't seem to be a sort of off-the-shelf solution at the time that would meet their needs. So having looked at that and realized that actually there was potentially a market for that, they built and launched a minimum viable product, which sort of 3 years ago was then, just over 3 years ago, we had our first paying customer of, I think at the time was £2 a month, which is a big sort of Yahoo moment. And then over the last 3 years, we've obviously grown, and we are now at the stage where we're in 103 countries globally with 32,000 plugged in entities trusting us for their monthly and annual consolidated financial reporting.
Excellent. Good stuff. And we're going to demonstrate Joiin a bit later on, so yeah. We can close that loop. So before we get into the main conversation here, Paul, we said in the kind of strapline top line for this session that it's about make the right software buying decisions for your practice and why there is no such thing as a free lunch.
Yes.
So do you want to explain what we mean by there's no such thing as a free lunch?
Yeah, it was interesting, really, and it was why I kind of raised the topic with you originally, Will, was that I'd been to a few conferences in the last couple of years, and having listened to some panels, some Q&As, and had discussions with people generally, there seemed to be a huge amount of importance placed on the relationship being built between the vendor and the practice, and over again, I heard about this relationship and the time it took to build the relationship, and the amount of meetings or lunches that people may have in the process of making decisions around their app purchase. And actually, surprisingly, on a couple of instances, I heard advisors suggest that they may have actually adopted not the better of two choices they were looking at because they had a better relationship with that app vendor, but it wasn't necessarily the better of the two products, which at the time I found surprising, but it's human nature that, you know, people buy people first, and time commits, and everything else. So I wanted to really look at, you know, that the cost of those relationships, and the fact that who's really paying for those lunches and those relationships in the build up to somebody making that purchasing decision.
Yeah.
Whether it's really absolutely necessary.
Yeah, and I mean we'll have some challenge around some of these points and things today, because we've got two options here, haven't we? In terms of if you take what we do as accountants, there's almost kind of commoditization versus relationship, and what we know from these things is that if you want commoditization, then the likelihood is you're going to pay less for it. If you want relationship, you're going to pay more for it. So is there an element here that actually there's an acceptance that if we want this cozy relationship, we've always got to pay more? And then I guess preempting your challenge back is well, how critical is that relationship to the delivery of whatever the product's going to do? And are we, when we take your products, for example, in terms of consolidating reporting, is it a commodity purchase? Do you see what you're selling as a commodity, and therefore the ability of the product to do what it needs to do is more critical than building a relationship? And almost, is this a software thing in terms of have we come to expect too much from relationship? Sorry, there's a load of questions in there, but I'm sure you get what I'm saying.
Yeah, I'll try to work through them. And I mean, from a relationship point of view, I think there is always a risk with the relationship. In the fact, I mean, and it's great at the moment. We're back to going meeting people face to face and having conversations and things, everything else, which is wonderful. But there's always a risk that actually you're driven much more by emotion and having that time, and the time commits in the same way as, you know, I always think back to, and it was a sort of analogy that was given to me very early in my sort of sales career, and the fact that time commits. You know, you walk into a shop, you're in a changing room in a shop, and a shop assistant keeps coming backwards and forwards with more clothes for you to try on, and something's too small, something's too big. But the problem is, if that assistant has been giving you 20 minutes or 30 minutes of their time, at the end of which you feel obliged to buy something.
Yeah.
So actually, it might be that it you know, had you not had the assistance and somebody hadn't looked after you, then your view may have been, oh, no, actually none of it fits quite right. None of it's quite right. But because there was that relationship, there was that support, there was that time given to you, then you feel more committed to buying something. So ultimately, your emotions play more of a part than actually, potentially, when you look at software, than actually the functionality and the value, the price, and all of the other elements, really.
Yeah. So it's almost that we end up buying a product that isn't fit for our objectives because of the emotional kind of drivers that we get. And I mean, I can talk about two specific examples with us. So for those that don't know our backstory at Farnell Clark is we were one of the first 100% cloud practices globally back in 2009. Predated Xero in the UK, and we are initially partnered with Cashflow, and we were Cashflow's largest partner firm for a very long time. Because of the way that products developed, we knew that we should have moved from Cashflow to Xero a long time before we did, and we did it in 2015, and we moved 500 or so clients from Cashflow to Xero. And one of the big drivers for that was the ecosystem that had been built around Xero particularly. And we instantly thought, great, excellent. Right, now we can plug in all of these extra tools. We can go out and buy all these other tools, and we can buy reporting tools, and we can do this. And we jumped in to make a purchase decision. We signed up, we paid somebody £500 a month, and we were too early. So we didn't have the data to enable us to use those tools effectively. So we ended up paying money because we thought it was the right thing to do. And that was largely emotional driven. But interestingly, within the couple of suppliers that we were looking at to provide that reporting tool, I did exactly what you said, Paul. And we made a decision on what we thought was the right product, but we made a buying decision based on the relationship we had with the other product, because we liked the guy that was the sales guy and the partnership guy, and we thought, yeah, we can work with him. And it actually meant that we chose the wrong product.
Yeah, I think product fit is really key with this, and it's probably the one most important aspect before you look at everything else with security and price and value and things, everything else. I think that product fit can be sort of over delivery or under delivery from a vendor perspective or a practice perspective. As a vendor, if you over deliver, then you're at risk of people not wanting to buy your product. You have two products do exactly the same, but another one has lots of extras and features and bolt-ons that people don't want. And you're at risk of people not wanting to purchase that because they see that they're paying for lots of extras that they won't get the use of. So they pass you by. And equally, obviously, you need to make sure that it's really fit for the job and does everything that you need it to. But certainly overall under delivery is really trying to find your product from a vendor perspective, finding your product market fit. But that goes hand in hand with meeting the needs of your customers, of course.
Yeah. And if we think about some of the specific topics here now. So firstly, we talked about the importance of choosing the right software for you and your clients. And again, this is something that we at App Advisory Plus have a real bee in our bonnet about, because one of the things we tell people that you really shouldn't do when you're looking at selecting technology, particularly for clients, because as accountants and bookkeepers, we've still got to get it right. We've still got to make sure that if we're recommending software, if we're suggesting software for clients, that it's going to do what they need it to do. And one of the ways that many firms if anybody that is listening does this, it's not a criticism, it's a natural thing to do, but just stop and think about what you're doing. And it's what we refer to as crowdsourcing app advice, where you go on to a Facebook group or whatever it is and say, I've got a client, they're an e-commerce client, can anyone recommend an e-commerce solution? Now, the risk of doing that is that just because a product fits for one client doesn't mean it's going to fit for yours. You've got to really understand what are the must-haves, what's the outcome the client's trying to achieve, what are the nice-to-haves, and really understand what your client wants. And this is also where many firms lose out on the opportunity to generate revenue, because they're not delivering this in a considered way in terms of understanding and spending time with the client on a chargeable basis to understand what their objectives are. This is an opportunity for you to generate revenue by providing robust advice to your clients, rather than just saying, oh yeah, I'll come up with some suggestions for you. And again, without kind of plugging what we do, we've got our app stack builder on App Advisory Plus that's about trying to help you narrow down what you're looking for. But the key thing is that whenever we look at software, firstly, the question I would put to you is does implementing software for your client make a direct or indirect benefit to them? Because if it doesn't, then don't bother. Technology for technology's sake doesn't help anybody. So really think about making sure that you're making the right choices for your clients, and that recognizing that this is stuff we have to get right. We have to, there's a risk inherent in us giving clients the wrong advice, suggesting the wrong products, or indeed taking on working with products that we don't really understand. And I think that point particularly is going to be relevant later, isn't it, Paul, as we get into talking about product-led growth and what you guys have done in terms of making it really easy out of the box. But in terms of that importance of choosing the right software for the firm and for their clients, anything to add on that specifically before we get to the considerations and decisions?
Yeah, I mean, there's a huge trust piece there, I think, from the point of view of the practice adopting anything that they're then going to be recommending and using as a reporting tool for their clients. So I think overall, obviously, product fit is key, but yeah, there's a whole host of other items, which we won't be going through an exhaustive list today, because it's not it doesn't, different people have different needs and wants from a business point of view and everything else. But certainly, I think demonstrating to a client and having the answers for a client, should they ask anything around data protection, security measures, whether your client thinks that sustainability is important or an issue, price and value, whether you're passing that price directly on to your clients, whether you're absorbing it yourselves. I think they're all key considerations. And I think from a practice point of view, and to demonstrate to a client, should they ask those questions, to make sure that you have done your due diligence, and it doesn't just fit as a product, but that actually it ticks all of the boxes that may be important to a client. And some of those things may be, there's different priorities for different clients, for sure.
Yeah, and how do you think firms should tackle this process? So let's say they're looking at a reporting tool, for example, for either that they're going to use across the whole firm for their clients, or they're looking at specific clients. What's the process that you think firms should be going through in terms of saying, right, I've got 12 products that are an option here. Where do they start?
Well, I mean, from our point of view, first and foremost, you want to jump on and try to use the product, understand clearly. I mean, accounting it feels like a really positive small community, actually. You know, when you go to conferences and things and everything else. So, recommendations from your peers, using platforms like App Advisory. If you're using Xero, QuickBooks Online, or Sage. Then clearly a lot of the customer feedback and reviews and everything are really useful. We'll give you sort of hints and tips on where a product is sort of winning, and where there might be some shortfalls. It's quite obvious in a lot of the reviews, elements that are really positive about a particular product and elements that maybe it could be doing a little bit better. So I think they're really useful to be looking at first and foremost.
And that's kind of one of the key points, isn't it? That you've got pros and cons, but they're probably pros and cons related to individual client circumstances. So for us, the start point is almost kind of understanding what's the criteria. And this is another interesting topic that we're going to be talking about Accountex in our theatre, is the idea of, if we take a reporting tool, and I'd be interested to get your view on this, Paul, should firms look at one product, or should they look at bespoke products? So we've had that debate around general ledgers in terms of, should you go one general ledger, or should you kind of offer a choice? But if we drill that down into other tools that you might use for your clients, what's your take on this? And don't overthink it or anything like that. I'm just interested in terms.
I think it's never
going to have one product, or should they recognize that different clients have different requirements and build bespoke for each individual client, rather than saying, like, all of our clients, you can use this reporting tool?
Yeah, well, I think it has, it's never a one size fits all. I think there's also a lot of drive from, whether it's like the QuickBooks Online, Sage Business Cloud, Xero, etc., and everything else, where a lot of it's driven by the small business owner first and foremost, before they necessarily come and even approach the advisor. So I think as a practice, embracing the fact that different clients will have different requirements, different preferences, according to the type of business they have, whether that's, QuickBooks self-employed, because you've got a one-man band who's on the road a lot, for example, and it logs their mileage and things and everything else between customers and that kind of thing. So I think actually being able to adapt to the client's needs, more importantly, than to try to force a client into that one size fits all kind of product.
Yeah, perfect. And in terms of the conversations we had before the session, in terms of the planning, some of the areas that we highlighted as areas that firms should be considering. We've talked a bit about product market fit. So this is firstly checking that the product fits with what your client wants, but equally it's about the app themselves, isn't it? In terms of, does the app deliver what they say it's going to deliver? Does it deliver what your client needs? To talk a bit about product fit, data protection. I mean, it's a really big thing now, isn't it, for firms, and the risk exposure that we have in terms of utilizing these tools for clients around GDPR, data security, particularly if we're looking at payments tools, which clearly we're not talking about today, but that comes with huge risk. So making sure that security standards are there. How should firms tackle that in terms of understanding what's the minimum requirement and what they should be looking for?
Yeah, I mean, every app should have published, obviously, on their website, details of their data policy, so that you can review that and know exactly who the data processors are, and how their data is being used. Also, how that data is being passed from, for example, Xero through to an application like ours. Xero use something called OAuth 2, which is something that we subsequently obviously use, and that's a industry standard from the point of view of being able to securely pass data from one application to another. You want to consider how and where that data is being hosted. We use AWS, which is a world leader, obviously, from a data security point of view, from a server management perspective. And also what kind of data an application is using. So we bring just read-only, obviously, so we can't make any changes, can't make any alterations, can't do anything with your data. It is read-only. And also then we limit, and this is a debate we're having in-house around an application that we're looking to deploy at the moment for another reason. And this is who in-house at the vendor has access to that data. So you've got client data being passed to an application. How big is the team? Who has access to that data? How many people are reading that data or able to see that data? So at Joiin, for example, we've implemented the fact that data comes in, you can raise a support ticket, for example. We're unable, and none of the team can just jump in and access your data and read your data. If you want some support from a member of the team, from some bespoke custom reporting, for example, we will ask you, are you happy to invite one of the team members in to have a look at your data? So they will actually physically, in the same way as they would invite a client or a team member within their own practice, if a team member of ours wants to come in and have access to that data, they need to be invited by you personally to do so. At the end of that, you can then, they can have the conversation with you, go through the demonstration of that data, and then you can block them again. So you can have complete control over how you or your client's data is being managed. So I think that's a really important aspect. I think then you have the likes of 2FA, so multi-factor authentication. It's something that Xero's rolling out right now. It's really important. I think it's from the 1st of April. It's compulsory 2FA with Xero.
I'm sure, like many, it's a bane of your life, but there's logic.
It feels
to
like a complete pain for everybody, absolutely. But actually, I think Xero suggested that it's somewhere like 80 or 85% eliminates data breaches. So actually, being able to have, when you're having a conversation with your client around how you're managing their data, where their data is being placed, where it's being processed, and being able to say, well, these are the security measures that are in place. If you have and we have some people plug into Joiin who ask a lot of questions around security, and some people just make the assumption that it's there. But it's key to make sure, I think, that you have that in place, and also that those policies are published on your website so people can read those.
Excellent. So security is a big issue. I'm keen to get onto the idea of product-led growth, but just a couple of other things that firms should be considering. We've talked about security, we've talked about market fit. Naturally, collaboration, integration, looking at where the integrations are you need it, and going beyond just the Xero, QuickBooks, Sage integration into what about the third-party products you need. Thinking about support and onboarding, lots of different approaches to that. Make sure that you've got the support and things that you need. Price and value is critical, and we'll come on to that, I'm sure. And the final one that's becoming more and more relevant for many people, and we know that generation shifts, people are buying based on different value propositions, is around sustainability, both financially but environmentally as well. So a few things for you to think about there. Certainly the way we've built App Advisory Plus is helping you kind of be able to get a direct comparison across those different categories of buying decision that you need to make. So Paul, we talked about this concept of product-led growth. Do you want to just describe what product-led growth is, first of all?
Yeah, I mean, it's basically a go-to market strategy for vendors, particularly in the SaaS business, which uses product as a primary driver for the business rather than sales. So PLG companies typically offer sort of free trials or freemium models whereby you can jump in, sign up, get to use the product for a period of time before you're expected to pay for it on a free trial, or on a freemium where you have access to a certain amount of the product but not all of the product, and you're then encouraged to obviously upgrade to take it to to the sort of full enterprise level. But the balance is a bit more tricky with the second one of those two options. And we prefer go for a free trial, give people absolutely all of the features that they can use so that they can see and identify all of the value that's there. I think one of the key points with product-led growth is that you have to deliver value really early on in the customer journey. So the point is, you don't have a salesperson who's there to tell you all about it and give you the benefits and talk about the values. Time is really valuable to everybody nowadays. So I think the idea is that from a consumer point of view, consumer grade products, we don't expect to have to talk to a salesman to launch Netflix or whatever else we might use. We get a free trial, we like it, we subscribe, we pay £15 a month. And it's similar to that. But obviously from a business to business point of view, the idea is somebody jumps into a product, they can sign up for a free trial. They then need a straight line basically between there and delivering that aha moment of this product works for me. And along that straight line, you want to have the smallest number of actions from a client as possible. So don't ask a client for more information than you need in order to deliver that first value moment. And I think the principle of it is that if somebody comes along and they have that aha moment really early on in their journey, then beyond that, they then are happy and prepared to commit more time to discover any extra value and configurations and things, everything else, and to explore the product a little bit more. The emphasis is really around self-service, which then means you are expected to jump on board and find your way. So typically a product-led business will have far fewer team members. You eliminate the need for pre-sale, sales, onboarding, not so much support requirement from a number of team members' perspective. But the idea in principle is that the product is simple, really easy to use, so you eliminate the need for that. And ultimately, because you take away all the sort of 4 or 5 layers of sales, then obviously there's much lower cost from a vendor point of view in-house. So that generally tends to mean that your product-led growth application is easier on the pocket for the end users. So you've sort of gone along that journey, realized the value really early, the product works for you, it's simple, it's intuitive. It's really important that it's simple, it's intuitive, it's really easy to use, so that it's self-service. And because of all of that, when you then come to the moment where you are ready to make the purchasing decision, the price is also much lower because of that self-service, which also makes that choice to purchase much easier when it's a fraction of the price of a traditional sales-led product.
And that's really interesting, Paul. And what I'm always interested in with this is what can we take as accountants and bookkeepers? What can we learn from different models? And certainly us as a business, we Dext, when they were a receipt bank many years ago in about 2012, made a huge impact on our business in terms of our accounting business, because they came in and they helped us understand their onboarding processes, and they helped us think about how we could build a better onboarding process for our clients. And I think that aha moment is critical in what you said. And I think there's definitely things that we can learn there in terms of how can we make the first engagements that we have with clients really, really impressive, that they go away and think, actually, they really get what I'm about. They really understand what I'm trying to achieve. And the second thing, which is interesting, is the self-serve, because clearly we don't want clients to self-serve on everything, but we as a firm built our own practice management software about 6-7 years ago, and we sold it ultimately to a vendor. But one of the things that I was trying to build into that product was the ability for clients to be able to self-serve to a point in terms of tracking progress of their jobs. I wanted them to be able to log in and see where their accounts production job was, so they didn't have to pick the phone up and speak to the team and say, how are my accounts doing? Because they could log in and they could see it on like a timeline. Or if they wanted to change an address in our systems. And we can do that kind of stuff without losing the relationship, because there's always a trade-off, isn't there, in terms of self-serving and relationship. And how do we kind of blend those two things?
Yeah, I think so. I think you've got it right from a hybrid perspective, for sure, with being a sort of service industry. And we very much, I think getting that, I mean, we have a support team, although we're product led. I think one of the key things is that actually, because, and we're looking at this sort of screen here, we've got 94% of our customers self-serve, for example. So only 6% of our customers ever actually reach out to us during their onboarding process and ask us any questions. So it's not to say support isn't there, but actually, because 94% self-serve, then our support, you're not then 80th in a queue or something when you do need support. Actually, that 6% that wants something a little more complex for their board reporting or whatever means that a member of our support team is always available for them. The typical response is in about 90 minutes, because so few people obviously reach out. Again, from a PLG point of view, I think feedback from your customers is a key part of product-led growth. You grow and you ask your customers. We poll our customers regularly and get feedback from our customers. We ask our customers for feedback. We've introduced 300 product updates, which have purely come from our customers' feedback over the last 3 years. Time to value, from a PLG point of view for us at Joiin, we use a product called Clarity, so we can see what our customer's journey looks like when they first start a trial and they come on board, etc., and everything else. And from that, we can see that the average is 7.5 minutes for somebody to jump in, connect to business, and launch their first report. So that aha moment for us is typically between 7 and 8 minutes, which is really early, rather than hours and potentially days. So we use, because of that, and obviously that self-service and people onboarding, we use value-based pricing against rather than cost-plus based pricing. What that basically means is if you look at sort of cost-plus, then you would look at your overall team, your costs, your salespeople, your onboarding costs, etc., and everything else. And then on top of that, you would add whatever you felt you needed to add from a profit perspective as a business. With value-based pricing, we don't consider ourselves in that equation. We look at the value that Joiin provides our customers. We've gone out and polled our customers, and we've looked at the average amount of time saving. Typically, it's that our customers save between 8.5 hours and 3 days per month using Joiin. We've asked them what that represents in a saving perspective. We know what it saves them as an average per month. And then we use a 10 times rule. So we charge our customers 10% basically of what the average value they save per month using Joiin is. And our average spend per customer is bang on that 10% mark. And that's how we basically, so it's all about the value a customer gets rather than what we need to charge them. And then based on all of that, we have 96% of our customers renew annually. So that would suggest that our product updates, our time to value, our value-based pricing, and our self-service model clearly is something that our customers are happy and pleased with.
And certainly there are key things that accountants and bookkeepers can take out of that. I mean, we could talk forever about value pricing and the way that value pricing is considered in the accounting space, when ultimately for many people what they think about as value pricing is cost plus. But that's a conversation for another day.
Yes,
I'm keen we need to get a demo. So Harry, if you want to tee that up, while Harry's doing that, we've just got a question in, Paul, you can answer from Ian. Ian says data security is super important, and I think cloud can easily be more secure than on-premise set up properly, but the flip side is accessibility. We'd be keen to know your thoughts on the challenges of data accessibility in the cloud. How can that be how that can be as seamless as possible, given all cloud providers will say it is your data, but won't necessarily make it easy for you to get to it. Does that make sense?
Oh, yeah.
And if you go into Q&A, you'll be able to see Ian's question.
Yeah, I mean, we have collaboration certainly as a key aspect in Joiin. So, for example, you have, as a practice, you can create a hierarchy within Joiin that allows you to invite individual members of your team and provide them with access to only certain clients within that hierarchy as well. And then you can also invite clients, if you wish to, into So it's almost like a, yeah, it literally is a hierarchy, so that actually, if you have anybody who's from a cloud perspective, obviously accessibility is key. And like that, you can generally invite and provide access to whoever you wish, but ring fence each individual person's data.
If we haven't answered that, Ian, pop another question and we'll get to that after we've let Harry do a quick run through of the product. So over to you, Harry.
Okay, lovely stuff. Very much enjoyed listening to that one, but I'm sure we'll chat about that later. So I'll just get a quick thumbs up from Will or Paul.
Yep, all good.
Okay?
Yep.
Lovely stuff. Okay, so very much following the theme of kind of that aha moment straight away. I'll show you kind of setup of Joiin, kind of as Paul was saying, kind of 7.5 minutes to getting to that point of running a consolidated report. So you kind of the average Joiin customer signs up for their trial, get presented with this landing page here, where you begin adding your Xero, QuickBooks, Sage companies or other software as well via a spreadsheet upload. So very simple in terms of that, getting that onboarding process going. So you press this add company, you then you get to choose connect to Xero, QuickBooks or Sage. And essentially by clicking on connect to Xero, you're redirected to a secure sign-in where you log in with your Xero credentials. And then it takes kind of a minute or two to load up that company data. Obviously, give or take based on the size of your chart of accounts, can be quicker, can be slightly longer as well. So what I'll do now is I'll show you one of those reports that you can kind of achieve within 7 minutes off the shelf. So I'm going to go over to our taskbar over here, and I'm going to open up one of our off-the-shelf financial reports. I'm going to go through the process of kind of deciding what's to be included within my report very quickly. So here I have a list of all the companies that I've added to this particular group previously. I'm just going to run a simple consolidation for these 2 companies. I'm going to select that, and now I can go through and I can decide how I'd like the data from these 2 companies to be laid out. So I'm going to run a report looking at Great British Pounds, and then I'd like to see from my presets, I'm going to run a report, let's say a report by company for March 23. So I'm going to get a view, company A, company B, and a total there, just like that. So that's kind of that aha moment there. We can see that something that previously might take a long time in Excel to get all of the data inputs and all of your lookups working correctly, you can kind of produce a consolidated report, as you can see in this total column here, within just a couple of minutes. Obviously, there is much more that we can overlay on top of that. So I'll very quickly touch on kind of a very important part of that consolidation process. So the managing of intercompany transactions and eliminations. They're all handled within the Joiin chart of accounts page. So this is that kind of overlay that I talked about here, where you can go through and you can tell Joiin which accounts are intercompany accounts. You can post in all of your consolidation adjustments, journal entries, etc. as well. And it's kind of a simple process. At first, you tell Joiin which accounts are intercompany accounts, and then you can go and overlay how Joiin handles those ones. So what I'll do is I'll very quickly now, just to finish off, I'll show you one of our kind of reporting outputs. So obviously I've shown you that kind of quick initial setup, running some reports, but once you've gone into Joiin, you've created your customized reports, managed your eliminations, and produced all of those consolidated reports. You can put them into reporting packs, which is essentially your kind of Joiin output, where you can have all of your month-end reports ready to be displayed, and all of it's kind of customizable as well. So you can add client or kind of your logos here, edit the colors, the themes, the background, everything like that. And these ones can obviously be downloaded to Excel, PDF. So I'm just going to scroll through and show you an example of a report pack. In here, we've got some of our custom reporting, so I'll touch on that very quickly and just give you a bit of an idea of some of the things that we've got going on here. So, so here we've got a kind of a customized report, just an example report that we can create within Joiin. So you've got some nice bar, donut, and line charts, some notes and commentary, and quite kind of a complex report here actually that I've overlaid. Using Join's really powerful custom reporting tool to remap my chart of accounts. So that's kind of probably number one question we get asked. My chart of accounts don't match. I'm kind of on a bit of a build buy strategy. Is that an issue? No, all of that can be done really simply within Joiin. And we have kind of nice user guides, instructional videos on all of that. So this is just kind of scrolling through an example of a custom report that you can create within Joiin. Again, all of these ones available off the shelf. So we've got this KPI reporting here, all of the consolidated view with your nice charts and graphs. And then just scrolling through some of the other reports, we've got available balance sheet reports with our consolidation adjustments there for kind of managing FX. And then finally, we also have our sales reports. So kind of consolidated PAR or consolidated sales by customer reports, which you can also drill directly down into Xero for as well and open up your actual Xero invoices straight from Joiin. So that's kind of a very much a whistle-stop tour. Got all the kind of the key off-the-shelf points in there. And I'll hand back on over to Will and Paul for a moment.
So just a couple of questions on that. I mean, I guess from looking at this, the key things are the simplicity of eliminations for that consolidation, the ability to kind of do that within Joiin, and assuming once you've set those up in your chart, then you've only got to do that once. And then every month you bring the data in and the consolidations are much quicker. Yeah,
exactly. All of those. So it's that kind of initial setup of managing the elimination structures, and then Joiin will do that automated for you each month.
Yeah, and I know that Joiin and the name suggests that clearly this was built with consolidation in mind. I mean, typical use case, have you got people that are using this for single company reporting as well? And if so, what are the reasons that people are doing that?
Yeah, definitely. So I guess obviously the main user is consolidated reporting, both kind of about 50% practice and kind of in industry. But we have quite a lot of kind of practices, advisors who initially come to Joiin for consolidation and realize that actually the reporting is as such that they could use it for their single entity clients as well. So we've got kind of a nice mix within the accountancy space of people who use it for a whole range of their clients, different industries. Spread out across the world, really kind of a real mixed bag of who the Joiin user is.
Good stuff. And Paul, coming back to you, because clearly we talked about product-led growth. You talked about the ability that nobody's you're not buying anybody's lunch, so that should in theory come through in terms of good value pricing. Can you just kind of touch on what's the standard pricing for people here? Because this is obviously a big part of your proposition, isn't it?
Yeah, and it's all about scaling, really. You can come on board for as little as £4.50 per entity for your first couple of entities, and then as you scale, we find a lot of practices will end up. We've got some customers with 300 plus entities plugged into Joiin, and then you bring that down basically to £1.50 per entity as you grow. So from a value point of view, we see ourselves really in the market as about 75-80% lower than our sort of next nearest direct competitors in this space.
And clearly you've answered the questions in terms of how you do that. The product-led growth is a key part of being able to deliver real value for money to end users by building a product that is intuitive, largely self-serve, and for you it's about getting those user numbers and encouraging people to use a tool for a broader selection of their clients.
Yeah, for sure. I mean, we often get asked the question, why are you so cheap? Can it be any good if it's that cheap? We don't see ourselves as cheap. We see our pricing as fair. We have a metric that we use on our value-based pricing, and obviously that works for us. Our costs are lower than those of typical sales-led organizations, and that reflects then from a retention point of view. When we have more difficult economic times, then it's important to make sure that your product delivers the best value.
Yeah, perfect. Very conscious of time. I normally try and wrap these up on time. Sorry, everybody, I'm 3 minutes behind at the moment, so I will attempt to get this wrapped up for you all. I always like to leave with some key takeaways. So we touched on some of the key things that firms need to consider around product fit, ease of integration, data protection, security, the support you get, sustainability challenges, both in terms of financial stability, but also corporate sustainability, and clearly price and value. I made the point right at the beginning that we've got to really think about what value does tech deliver to our clients. So where is the direct or indirect benefit of implementing technology to your clients? And if it doesn't have a direct or indirect benefit on your clients, then don't do it. And we talked about product-led growth, which emphasizes self-service, value-based pricing. There's clearly opportunities for accountants and bookkeeper firms to think about how they can adopt some of that thinking and apply that to your own firm. If you don't already, it may be you've already got opportunities to create that aha moment that Paul talked about really early on in the client cycle. So some takeaways for you there. Finally, the guys at Joiin have an offer for us. So firstly, you can get a 1-month extended trial. And if you sign up and use Joiin, they have very kindly offered you 20% off your first year use of Joiin. So it gets even cheaper. Just use the code AAP20 on sign up. Paul, Harry, if anybody wants to get in touch with you to organise, well, I guess you don't need to do demos because you've just said it's all self-serve. So just go to join.co and sign up there. Is that the step?
Yeah, so if you go to our website, we actually have a pre-recorded demo. We do offer demos if people would like that human touch, that's absolutely fine. But yeah, go to our website, join.co. You can sign up for your free trial there, kind of get going. And then obviously we've kind of let the secret, haven't we? Make the most of the support team if you'd like to.
Yeah.
And,
also, if anybody wants to continue the conversation, then happy to email either Harry or myself, Paul at join.co or Harry at join.co.
Perfect. And we will be circulating the recording to everybody that's attended. There'll be links and things in there for anything you need. We'll include that special offer code for you as well. So all that is left to do is firstly thank all of you for taking time out of your diary to join us. Those that are watching on demand, thank you for taking time from you guys as well. And Paul and Harry, thanks for your input. Really great to have had you as our app of the month for March. And we're going to run a live version of this, slightly more in person at Accountex in May as well. So if anybody's in the UK at Accountex, do come and see us there as well on day 1. So thank you all very much. Enjoy the rest of your day. Paul, Harry, thanks very much. We'll see you again very soon.
Thank you.
Everyone. Take care.
Cheers, Will. Thanks, everyone.
Bye.